First quarter had obviously a lot of winter weather this year. We had a lot of cats. We had our worst first quarter in terms of winter losses really in the history of the company. Over $11 million in the first quarter in cat losses. So it was very, very difficult. We're in business to help people put their lives back together in the event of a loss, and I think our claims department performed admirably in helping folks with their winter weather claims. In fact, recently we were in Massachusetts doing listening tours. We asked that question because Massachusetts was probably the state that was most impacted, and we got very high marks. So I think our claims department performed extraordinarily well. In spite of a very difficult winter, our first quarter was not too bad. We typically have in our first quarter, because of our heavy concentration in the Northeast, we usually have a little bit higher combined ratio to start the year. And we have that again this year. The combined ratio is 100.9 through the first quarter, which includes some of that winter weather, and probably will bleed a little bit into the second quarter. So we'll probably see continuation into the early second quarter. But we think if we can just sort of normalize the storm activity, we should see our combined ratio improved quite a bit as the year goes on. We actually grew our surplus over $23 million to about $1,036,000,000, and that was really led by our stellar investment results, almost $15 million ahead of plan in the first quarter. So that's a very satisfactory result. It may sound odd trying to get our combined ratio back on track with a difficult first quarter. Probably our biggest challenge remains growth. Growing our commercial lines and our bond operations slightly. Our personal lines is still shrinking, so the overall net premium growth is about flat. The good news though is we're seeing a tremendous uptick in new business in personal lines in both home and auto in really most of our states, so we're very encouraged by that. We expected personal lines to grow this year, and we think that'll accelerate as the year goes on. Our two best profit centers in the first quarter were bonds, which performed in the mid-80s, and by the way, grew over 6%. And commercial lines, even in spite of a lot of those winter losses, are commercial losses. It's not just home losses. And commercial lines was just a hair under a 94 combined ratio, and by the way, also grew a couple of points, so that's a good result. Personal lines, again, with all the homeowners losses, is suffering a little bit and is behind its combined ratio plan, but we expect that to improve as the year goes on. As far as our regional operations, it's kind of obvious the two northern regions, both New England and the Northeast, their combined ratios are over 100. New England really, again, with the concentration of storm losses there, had the highest combined ratio. The Northeast region was over 100, but within striking distance of its plan. Florida, once again, has performed extremely well. Their combined ratio is in the mid-70s. But the good news is we have two other profit centers that have had some combined ratio temperatures the last couple of years. It's only the first quarter, but both the Southeast and the Western regions are nicely below 100 combined ratio, both in the 96, 97 range. So that's very encouraging. We're real excited about the launch of our new personal auto product, which is going to have a much more simplified pricing model, which I think both our employees and customers will love. We're anticipating getting that out hopefully mid-year in the state of Virginia, and then we're currently putting together the rollout schedule for the rest of this year and into 2016. So we'll be talking more about that as the year goes on, but Virginia's the first state. We're real excited about getting that out hopefully by mid-year. Once again, to our customers, we really appreciate the business that you give us and putting your faith with your customer in us. So we really appreciate the business, and hopefully if you were impacted at all this winter with storm losses, I hope we performed well for you and continue to earn your trust. So thanks for your business, and hopefully you'll give us a lot more as the year goes on.